Good morning and welcome to the webinar on creating fatal claims on piCalculator. My name is Andy Brown, the piCalculator trainer. Thank you very much for coming on the session today. Apologies for a slightly late start. We were awaiting a fire alarm test in the building where we're based. So the purpose of this session is to show how piCalculator can perform calculations specific to fatal claims, in particular dependency on income and services. Today's session will cover how to create a fatal claim, how to add details on dependence, adding losses in the Law Reform Act section, adding losses to the Fatal Accidents Act section, in particular dependency on income and dependency on services. Use additional features, for example, creating an associated non-fatal claim for a dependent, or to add details for a claimant who is not a dependent. Exporting the schedule as a court-ready schedule document and Excel spreadsheet. Understand where to access further support for creating fatal claims on piCalculator. At the end of the presentation, we will leave time for questions. If you have any questions during the session, please submit them via the chat section by selecting the instant messenger icon at the bottom left-hand side of the Skype meeting screen. Please ensure that you have given your name and company in any message sent to us if you haven't already provided this information when you came onto the webinar. Note that any messages sent to us via the chat option can be seen by all those viewing the webinar. If you wish to send us a more private message, email us on piCalculator@verisk.com. We will be monitoring this email address during the webinar. If you have any audio or visual issues during the session, we have provided you with an attachment in the chat section called Troubleshooting on Skype. All webinars are recorded and will be distributed following the end of the session. If you want previous versions of webinars, please email us on piCalculator@verisk.com. So, to start a fatal claim, in the Your Claims view of piCalculator, add Fatal Claim. And first of all, we will complete the fields to set up the claim. The mandatory fields have asterisks next to them. So when I create a claim, and I'll put in the detail here of my claim reference, which I'll put in as fatal training, and my first name and surname. These of course can be anonymized if required, although obviously it's picking this information up on the exported document into Word. When I create a date of birth, I can either enter it manually, or I can use the calendar option as shown here. So I'm putting in the 6th of August as the date of symptoms in 2017, with a date of death at a later stage, and I'll put that in 10/2018. If of course the date of symptoms and date of death are on the same day, then obviously that information can be entered as such. I will provide a gender for my claimant. And a reminder to you as well that in the Your Role field, it's important that you choose the correct role for yourself, either a claimant role or a defendant role. And it is in fact this field that picks up whether or not your claim or your schedule at the end of the process is exported into Word as a schedule if you're a claimant role, or a counter schedule if you are a defendant role. In the jurisdiction field, if we select England and Wales, we will automatically get the discount rate of minus 0.25%. Every claim needs to ensure that the GDPR confirmation box is ticked. This relates to the correct use of data contained within the claim. Then when we set the detail on the claim up, we select Add Claim. And as with a non-fatal claim, we come into the overview. Because this is a fatal claim, the summary will only display the values of losses for the Law Reform Act and the Fatal Accidents Act. And we will look at these in more detail later. Below this section are the multipliers, which will form the background of the calculations. And these multipliers are only correct in relation to the information we supplied when creating the claim, plus the defaults contained in these settings in the key facts area at the top of the page. For more information on the key facts, please refer to the Personal Injury Clinical Negligence Claim webinar recording. The only significant changes for a fatal claim in the key facts area are reduced information required when adding an impairment, and in the employment settings only relating to before the date of symptoms or death. We can also add details on a claimant in the key facts area, and we will look at this later. To see how a multiplier has been created, as before, rest your cursor on a green circle and an explanatory box appears. This information on the key facts and multipliers can be exported into a Word document that can be shared with relevant parties at the start of a claim. We can add dependent information within a fatal claim. We would do this by opening up the Dependents section, selecting Add Dependent, and complete the personal details as required. So I'm going to put in here John Smith as my details and give a date of birth as such. Create my gender. I can, if I want to, mark this dependent as a claimant by ticking the relevant box, and the dependent's details will appear on the exported Word document. I also need to add in whether a dependency is for services and/or income and the duration of this dependency. In this case, for a spouse, I'm going to leave it as rest of life, and then I select Save. I will add in further dependents. So in this case, what I'm going to do is I'm going to create one for a parent and put in their date of birth as 01/04/1950, provide them with a gender, and select in the parent's case dependency on services for the rest of life of the parent, and then save that detail and add in a third dependent, in this case a child, again with a date of birth, and provide obviously them with a gender as well, and in their dependency on both services and income I'm going to restrict it to the age of 21 for when the child reaches 21. When all dependents have been added, I can then go across and select the dependency timeline to view durations, dates and ages for this claim. For example, if I go to the end of services and income dependency for the child, I can see that this will occur on the 1st of the 9th 2030, which is a duration of 10.78 years from the date of calculation. the deceased would have been 48. The spouse will be 47. The parent will be 80. And of course the child will be 21. I can export that information into a Word document for reference. So we now come to entering in some losses, and we can select either the Law Reform Act or the Fatal Accidents Act from the main view. We'll start with the Law Reform Act. When it's been selected, we see that it can be divided into general damages or into special damages. In general damages, you can enter as either a generic figure covering a number of damages or as individual damages. In special damages, entering losses follows the same process as we would have seen in the non-fatal claim webinar. I will show you though for today how to enter a travel loss for special damages. From the special damages section, add new head of loss. Provide a description for the head of loss, in this case travel to hospice, and add the loss. Insert a new loss to enter the details. From the loss type, we're going to put in travel continuous. We'll enter the dates as the start being the 20th of the 9th, 2018 until the date of death. It's 10 miles each way. The cost that I'm putting in for petrol is 45 pence, 0.45. I won't put a parking cost in, but I will say that this occurred twice a day. And then when I've put the details in, select Save and Close. The total cost is £216 with interest added as well. So that covers the special damages side of entering losses. What we're now going to do is add some Fatal Accidents Act, which of course is very different in the detail that we will be putting in. I will divide the losses in the Fatal Accidents Act into three: bereavement award, dependency on income, and dependency on services. We recommend for a bereavement award that this is added through the FAA section, as the system will do the calculation for you. To add a bereavement award, select FAA losses from the left-hand side of the menu and select Add New Loss. Enter bereavement award in your description for your head of loss title and add loss. Insert new loss, and in the drop down field where it says type, select bereavement award. Now when we've done that, we see that this message automatically appears, which is that you don't need to put anything in here, as the system will calculate the appropriate award based on the date of death. So all I would do is go to Save and Close, and here we can see the detail. The bereavement award, £12,980, with the appropriate interest added of £74.30, making a total figure of £13,054.30. We'll now do a dependency on income, and a dependency on income can be either joint or single income. The example we're going to look at will be where joint income is taken into consideration. So from the FAA losses section on the left hand side, add new loss, and we'll create our head of loss title of dependency on income and add loss. Insert new loss, and in the type of field we will choose, of the two dependency on income options, the first of those. Note the default dependency rates of 66.67 and 75%, which are going to be applied to the values, and these can be amended if necessary. There are 4 tabs that need to be completed to get the dependency on income calculation. All 4 have mandatory fields, but if the information is not known, then enter a 0 value until you are provided with the missing details. In the first tab, which is deceased earnings, you can enter relevant details. If, but for death, the deceased would have earned different amounts during the rest of their working life, you can select however many periods are required. But for ease of calculation, I'm going to keep it as 1 and enter a single period, putting in a value of £30,000 a year. The second tab covers the deceased pension. If there is more than one pension, so a combination of state pension and company pension, then select how many pensions are required and enter the relevant details. Again, for ease of calculation, I'll just enter one pension detail and provide with an annual pension detail of £8,000. The next 2 tabs relate to the dependents' earnings and pension. The same rule applies as with the deceased's details, and I'll provide the same details as for the deceased, so an income of £30,000 and a pension of £8,000 annual value. When all details have been entered, select Save and Close. The calculation is divided into different periods. The first period covers the years of the dependency for the child and is divided into 2 columns. So the total period is 11.92 years. And the calculation takes into account both the earning values, 30,000 each, applies the 75% discount, which provides a figure of 45,000, less the claimant's income, which leaves 15,000 as the amount to go into the calculation. As I said, this is divided into 2 columns. The first is for the period from the date of death to date of calculation. The period, as if I rest my cursor on the green circle, covers 418 days at the at 0.25% interest, providing a figure of 48.94. The second column is from the date of calculation to the end of the dependency when the child reaches the age of 21. And the explanatory box again explains how this has been achieved. So our total figure for this first period is 17,148 plus 137,100. Provides a total figure of 154,248. The second calculation covers the period from the end of the child's dependency to what would have been the retirement date of the deceased. This is a duration of 19.39 years. Again, the 2 incomes are combined, and this time the dependency rate is 66.67. So the amount is £40,002 minus the claimant's income, providing a figure going into the calculation of £10,002. Again, the calculation is shown within the explanatory box, and the figure of 170,734 goes into the calculation. The final period is from the start of the dependent's pension and the expected date of death of the deceased had they not died. This is a figure of, or a duration of 17.794 years. The dependency rate is 66.67 and applied to the combined pension of 16,000 minus less the claimant's pension, providing a figure of £2,667 that goes forward into the calculation with a result of 54,864. So adding these three figures together gives us a total dependency on income of 379,847. So that is dependency on income. The other major type of loss in the FAA section is dependency on services, which can consider whose age is used for the end of the dependency. So, to enter a dependency on services loss, select Add New Loss from the FAA section, provide your head of loss title of dependency on services, and add loss. Create a section. We're going to create a section because we're going to divide our dependency on services into two areas, which will be from a dependency on services for value or dependency on services hourly rate. So the first one will be gardening or gardening for parent. When I created the section title, I'll go to Insert New Loss, and from the drop down for the type I will choose the dependency on services hourly rate. The loss will cover gardening services that the deceased would have provided to their parent if they had not died. We will use, for the end of the dependency, the age of the parent, and leave the duration of the loss as date of death to the end of the dependency, which would have been the expected date of death of the parent. The frequency of this service would be 1 hour per week at a cost now of £15 an hour. And we save and close when we've done that calculation. It's divided into two columns. The first covers the period from date of death to the date of calculation. The second is from the date of calculation to the expected date of death of the deceased's parent. So there are the details showing of how the calculation is done in the explanatory boxes. We're now going to add a second dependency on services, this time for value. So we'll add a new section first of all, and in the section title we'll provide the title of DIY and save. Insert New Loss, choosing from the type field dependency on services value. We will use the age of the deceased because this was a service that the deceased would have provided. But we will say that the duration of the end of this dependency will not be when they would have died, but the age of 75. The dependency value we will say is £500 per year. Once we've entered that information, save and close. And we have now the detail on this particular dependency on services for value, again in two columns, from the date of death to the date of calculation, and then going forward from the date of calculation to the end of the dependency, which we put as the end of the period this time, which we said was 75 years. Gives a total of £20,051, and then the two dependencies are added together and we have a grand total of £61,906. That completes the specific calculations for the Fatal Accidents Act section, but it is possible also to add general continuous, periodical and one-off losses to this part of a claim. We're now going to look at some other features of a fatal claim. The first of these is about adding details where a claimant may well not be a dependent. For example, an aunt of children who have lost parents. And you can provide the claimant details within the key facts area. Select the claimant tab and enter the details of this claimant who is not a dependent, and those details will appear in the exported document. If the claim is for estate only, then the relevant box should be ticked, and then it will only be possible to enter LRA losses in the claim. There are occasions when there is a loss which needs to be claimed for a dependent which cannot be part of the fatal claim. For example, counselling for a dependent. It's possible to create an associated claim which will be a personal injury clinical negligence claim which will be on behalf of the dependent. So to create an associated claim, you come down to the section for the dependents, select the paperclip icon which is next to the for the relevant dependent, and confirm the message to add associated claim. This will take you into the brand new personal injury clinical negligence claim for the dependent. And the details that were supplied when you set up the dependent have populated the relevant fields in creating the claim. You would add the details in the claim as necessary, for instance, bereavement counselling to be added through future losses. If you were to then go to your claims view of piCalculator, which will be listing all the claims that you have on piCalculator, you'll see here that the claim on behalf of the dependent shows in your list. If you go below the original claim that we set up as a fatal claim. If we go into the claim for the dependent, we can then go back to the original fatal claim by selecting Open Primary Claim. So here we are back inside the fatal claim. We can see that the claim is currently at a figure of £455,025. We can, of course, continue to use the full menu on the left hand side should we wish to add any further information about the claim. I just want to show you a couple of things about the export claim. If you can continue to export the claim into either Word or into Excel. Full details of how to export claims can be found in the Personal Injury Clinical Negligence webinar recording. For help resources that are dedicated for fatal claims, if you select the help section at the top of the page, you will see that we have specific YouTube clips for adding general damages, special damages and FAA losses to a fatal claim. You can also use the red mark help section to contact us for further support. And a reminder that if we ask you to share the claim with us by you selecting Start Sharing, the details of the claim are confidential to us. We will not know any information about the claimant. So that's the end of the formal part of the presentation, and we'll now turn to the questions that you've been submitting during the session. Okay, so there are no questions at the moment. That's absolutely fine if there are no questions, but you have any further things that you want to perhaps send through to us individually, then please feel free to email us at piCalculator support@verisk.com. And what we'll do is at the end of this session, we will be able to we'll be editing the webinar and send out the recording to you as soon as possible. Okay, we have actually just one question. A couple of questions have come in just now, actually. Do you have to put percentage figures for loss of, do you have to put 2 percentage figures for loss of dependency claims? No, you don't. You can just put in the figures that you want. It does it automatically for you. Okay. So there's, yes, if I go back to that figure, the automatically provides you with 66.67 and 75%. If you want to amend those, you can do so. And how do we stop dependency on services at a specific age of the deceased? So in a way, I suppose what I showed you there, if I go back to that particular loss, if we put on dependency on services at a specific age, what I would do, if I go back into that loss, apologies if I just need to go back to dependency on services, and if I go to the DIY one that I did, what I would do is, rather than have the end of the dependency on services as the loss date, if I just get rid of that there, so that could have been, that's how it would be originally set up, as the loss would go through to the when the deceased would have expected to have died. But if we say actually it's unlikely that they would still have been doing offering this service at that age, which could be 89 for instance, we could just enter in a figure of the age that quite probably that service would have been would stop. They wouldn't be likely to be doing DIY beyond the age of 75, for example. I'll update that loss there. There we go. So I've got another question that someone's asked us, which is to talk through the use of the age option can select a dependent. I'm not sure that I'm understanding the question there. Sorry. I think what the question might well mean is being able to use age as a factor for limiting the particular period. You can select a dependent instead of using the age of a deceased. Yes, that's true. So when we looked, for instance, at the gardening for the parent, what we decided to choose there was not the age of the deceased, but the age of the parent. Sorry, I hadn't actually set it up in that way. So you use the age of the individual who is the recipient of that of that service. So in this case, it would have been through to the end of the dependency of the parent, which would be their likely death at the age of 87 or 89. Again, it could have been for a child. It could be a service that the child, the benefit of the child up until a particular age of the child. So it might have been about childcare. Now the childcare wouldn't necessarily go through to the end of the child's dependency. Not likely that childcare is needed up to the age of 21, but it might have been up to the age of, say, 13 if it was late after school care or something like that. So it is about using the age of either the deceased or the dependent for the particular service that's that needs to be calculated. And I think that's it for questions. So thank you again for attending today. As I say, we will be sending out a copy of the recording of the webinar. If you have any further questions, please do send them to us at piCalculator@veris.com. And we'll also be letting you know about future webinars that will be running in the new year. But thank you for today, and I hope you have a good rest of Friday. Thank you.